Alright, welcome traders. So today I want to teach you how to actually trade breakouts, how to trade breakouts like a pro. So first we are going to go through the mistakes that people make while trading breakouts. Quickly we are going to go through that, and I'll show you how you can actually trade breakout like a pro. Usually I don't advise breakout trading, okay, but it's also something you can use if you want to just scalp quickly in the market. Although you can also get a good opportunity that you could hold for the long term if you want to. It's just about getting that snapper entry. That's what is important to us, and that's what I'm going to be teaching you today on how to trade breakouts. Okay, so without much talk, let's go into it. Now, the first thing that most people do is that they trade breakouts at any level, at any zone. See, you see, breakout trading is a strategy on its own. Okay, it's something that requires concise analysis before you even do it. What most people do is that they just see a market moving like this. They just want to just catch just any breakout they see. Look at this market, for example. Okay, they just want to catch anyone they see here. They just want to catch. They just want to catch this. Okay, they just want to catch this. They just want to catch this. I get it. They just want to catch anything catchable to them. Okay, and most times they don't even analyze. I get me. So let's go to a lower time frame. Let's just see. Most time people don't even analyze. Okay, just see a candle going up. Let's say this candle going up now, somewhere here, they'll just buy. That's a very wrong approach to breakout trading. Now, breakout trading is a strategy on its own. Means that it's one that also require attention the way you do your normal trend trading. Another one is that most people, they do not wait for the breakout candle to close. Okay, now I'm going to also show you that in the chart. It's part of what I'm going to teach you today. Okay, so let's just go into it. I'm going to let you in on everything you need to know while I'm teaching. So for you to trade breakouts, one thing is important. You need to have the setup that you are looking to trade, and there are two setups you can trade. Okay, because in every point in time, the market is either doing one of these three things. It's either trending up, trending down, or ranging. This is what I always teach. Okay, market is either trending up, trending down, or it is ranging. That is neither going up or going down. This is what the market is doing in every situation. So you can decide to take or trade your breakouts when the market is trending up, or you can also decide to trade your breakouts when the market is ranging. Okay, so you can trade your breakouts when the market is either trending or ranging. But then here is the thing: if the market is ranging, how exactly do you trade the breakout? So let me check if I will see any good range here. Not really. Of course, this market was ranging, okay, within this region. I'm going to go to a 30 minutes time frame so that we can visualize this very well. Now we're going to come back to this 2 hours, because there's something I want to show you from these 2 hours. We're going to come back to it, but let's look at the 30 minutes time frame. We're going to visualize that portion where, so we'll see. Okay, and let's say I wanted to trade the breakouts, okay, during this range. How would I have gone about it? So the first thing, you have to understand the market situation you are in, right? So the market situation we are in right now is obviously ranging. The market is ranging. You can see it here. So you can see that I've already drawn out my rectangle on the both ends. That is what we call support and resistance on the both ends, right? And I'm waiting to trade the breakout when the market breaks out. Okay, so once you have drawn your rectangle, you don't adjust. Do you understand me? You don't adjust. Okay, except there is a good reason to, which I'm going to show you soon. So let's say this market was still somewhere here, still playing around and doing this thing. How would I know when this thing eventually break out? Okay, what is going to tell me if this market have broken out is, one, the breakout candle, did it close above the breakout, or it came back inside to close? That is one thing you have to ask. So look at this. Okay, so obviously this is where the market broke out, right? So which candle am I looking at? The candle I'm looking at here is going to be what this. Okay, and this is my breakout candle. Make sure it closes above fully. Now this candle was still within our rectangle, so it is not our breakout candle. Our breakout candle is obviously this. So what do? When the market breaks out like this, we simply what? We simply wait. We wait for that time frame. Okay, now the time frame you're working on is very important. You get me? Because when the market breaks out, you have to know the time frame in which you are looking at. So now we're looking at the 30 minutes time frame, meaning that we're looking at 30 minutes candle. Ideally, for you to trade breakout, we are looking to catch one candle after the breakout candle. Ideally, okay? That is, except you want to hold the trade for long term, which I don't advise. So after this breakout now, which was our breakout candle, it was this was our breakout candle, right? After the candle, we could have entered at this portion. Since the market closed out, we'll enter at this portion and put our stop loss below the closeout candle. Okay, and for you to trade breakout, you should understand that it's more like scalping. You are scalping in a way, meaning that you are going to be using a big lot size, looking to catch small pips, and sometimes your risk might be bigger than your reward. Okay, except you want to hold the trade for long term, which most of the time it doesn't work out. So enter at this portion, and our stop loss is supposed to be below the candle that broke out. That is how we should be, below the candle that broke out. So this way our stop loss would have been for this trade. Okay, now for a market that broke out like this is the basic way to enter. Now there are two ways to go about this. You can decide to enter here and put your stop loss here and try to catch the next 30 minutes candle, okay? Or you can decide to wait. Why? Because most times when the market gives you a breakout like this kind of clean breakout, it mostly come back to at least fill out half of your imbalance left. Okay, this breakout was very clean. Most times it comes back to fill out the imbalance, but the second candle, that is the candle that comes after it, most times come back to fill out the imbalance here before it starts going up. So ideally, I would have entered this trade. For me personally, I would have entered this trade somewhere here. That is where I would have probably set my entry, and my stop loss would have been here. Okay, and obviously after that, you see that the market actually went up without coming back. I would have missed the trade, but that would have been the best way to enter a trade. That is why, because you can enter here and the market just starts retracing. Okay, most times you might not be able to hold the market because you probably enter with a big loss size. That is the scalping. You enter with a big loss, you might not be able to hold it. You might have to close out. But if you waited for the market to come back here first before you enter, you would actually mostly catch a clean entry or a cleaner entry. Okay, although that is something that happened here, but this one would have been very, very long term. We are not looking to be trading breakouts again in situation like this. Okay, that would have been a break and retest. That is different from what we're talking about. All right, so that's how I would have entered this trade. I would have entered here, okay, with hoping that this candle we touch it and go up, put my stop loss here, then maybe my take profit would be probably 1-to-1 or catching the next candle. Basically, what I'm supposed to do, what you will do is, when you want to catch a breakout, what you're actually concerned is the next candle. You're not looking to hold the trade for years. Okay, it's the next candle. If you traded this breakout, okay, all you were looking for, or all you were looking to do, would have been to catch this next 30 minutes candle. Okay, that's why I told you that most times the risk to reward is low, except you want to hold it for a long time, because there's sometimes that the market will break out and it just keep riding. Okay, it happens, but not every time. But the surest one for that will give you about 70% win rate is to just wait for the next candle, catch the next candle and exit. That will give you a cleaner curve altogether. Okay, so that is how you actually trade this breakout. That's how you actually trade this kind of break. Now let's go back to the 2-hour time frame to see what happened. Look at the zone here. Now, you don't enter a breakout when the candle that broke out is too long or is too big, although it worked out perfectly here, but you don't do that. It's a rule. Okay, because if the market was too big, as this big, most likely that next candle will come back to fill out the inefficiency that this one created. Okay, especially if it's in a higher time frame, you can't hold it because this is a 2-hour candle. Okay, you can't hold it. Your account might not be able to actually hold it. So if I was looking at a 2-hour to trade this, I would have not taken this trade, even though it worked out beautifully here. Yes, this is one of those few occasions where it might work out, right? But most of the time it wouldn't. Okay, it will eventually come back to eat you up first before it start going up. Okay, the next 2-hour candle would, or it was supposed to come back to fill out this inefficiency before it start going up. So that is why you don't enter when the the candle that broke out is too long, it broke out too far, okay, because that puts you at risk altogether. So, but if you wanted to catch this trade, let's say you saw this trade breaking out, let's say within the 2 hours you saw it breaking out and it was here, you could have gone to the lower time frame, let's say 30 minutes time frame, to catch it. Now, even that 30 minutes time frame we went to, if we went to the 5 minutes of it, we would have gotten even an earlier entry, an earlier cleaner entry and exit. Why? Let me show you. Okay, so this is our zone in the 10 minutes, and what do you see? Look at the candle that broke out in the 10 minutes. Okay, this is the candle that broke out, this is the candle that broke out in the 10 minutes. This was it. Okay, it means that we would have gotten a better entry here. Why? Because we could have easily entered this trade here, caught this next one, put our stop loss probably here, because we would have easily entered this trade here, put our stop loss here, caught this next move, and we're out. Okay, this is how you can actually just make the best of breakout. When you see it breaking out in a bigger time frame, okay, you can just come to a higher, you can just come to a lower time frame quickly to just catch the next candle. Now make sure the candle here closes, okay, make sure it closes above it, then catch the next candle, just one, the next candle, catch it, exit at the closure of that candle. Okay, just exit at the closure of that candle. If the candle was bearish, okay, now that's the difference. If the candle was bearish, most likely it is trying to come back here, okay, to fill out this inefficiency. Just wait and see what it's going to do. Okay, but once the candle comes back to this portion, okay, and it starts crossing, of course your stop loss should be able to take you out here already. Okay, so that is for that. So guys, basically that's how you can actually catch it. And if we went to a 5 minutes time frame, you'd have even caught a better entry, because 2 5 minutes time frame made up this 10 minutes you are seeing here. All right, so this is it. This is how you actually trade breakout. So what are the things I spoke about today? First, you have to make sure that the market or the candle close outside your zone. So it has to close outside. Don't trade when the market is still forming, or when the candlestick is still forming. If this candlestick was still forming, you shouldn't be trading. Wait for it to close. That 10 minutes, that time frame you are looking at, should pass first before you decide to take it as a breakout, trade this as a breakout. Secondly, if the candle that broke out was too long, just leave the market. Why? Because you might enter here and the market come back here to fill out inefficiency, and you might be at a very big loss, because the candle that actually broke out is very, 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 very big, unlike this one you're seeing here. Okay, so if the candlestick that broke out is very, very big, it's massive, well, just do not enter the trade. So those are the two major things I should put in consideration. Now, some people might decide to hold the breakout. Like I said, some people might decide to hold it. It's fine if you want to hold it, but remember that most times these markets that broke out usually come back to retest. Okay, so while you hold the issue, expect that the market could actually come back to even take you out. Okay, here it didn't do that, it didn't really do that here. If your stop loss was here, it wouldn't have taken you out. Okay, but trust me, you wouldn't have been able to hold all these minutes just to catch this move. That would have been hard for you. So easier to use, just wait for the breakout, wait for the candle to close above it, then enter, put your stop loss below, catch the next candle and exit. That's why it's called breakout trading strategy. It's a scalping strategy. If you really want to hold, you should make sure to go break even when the market have moved in your direction. So when the market moves in your direction here, you should have gone break even. Okay, in case the market come back to what, to probably spoil the game for you. So make sure you go break even if you want to hold. And trust me, it's better you have a set take profit, like an amount you're actually looking to gain from this trade, rather than just holding indefinitely. Okay, so that is that. So before we leave it, right, so let's look at this. There was a breakout here, right? Which candle broke out here? Now look at this one. You see that this market actually came out, but it closed back inside. So if you were trying to chase it to catch it here, you would have been stopped out. Still referring back to what I said before, you have to make sure you close above. So which candle closed above now? It is this one. Okay, and after that, what do? You enter, put your stop loss here, then you look to catch just the next one, right? And that delivered beautifully here. After the next one, you exit. Like I said, exit. If you want to hold, no problem, but if you held, you would have probably been stopped out. Okay, maybe you're not stopped out, you are lucky, but you would really be paying, because you are holding this trade for 1 2 1, 2, 3, 4 days and you're still not in profit, you'll be pained. Most times people cannot hold the trades for that long. Okay, so this is basically how you actually trade breakout. Now the other type of breakout that people trade is the trading breakout. Okay, it's just like the market is moving like this, trending, moving like this. You simply just wait to just catch it. It's the same way, but you have a higher probability of success if you hold this one, because this one is already trending. Are you getting me? So let's look for just an opportunities zone. Where's the candle that broke out? It is this one. Okay, of course, obviously candle broke out is this one. And when do you enter? At the closure of this candle. Ideally, me, I wouldn't enter this one. Why? Because the candle that closed was too far. Okay, or the candle that closed was actually too big. I wouldn't enter this trade. If the candle that broke out was small, I could actually enter, but this one was too big. Okay, so I wouldn't have entered that trade. Let me just look for just a perfect example before we leave. Now, yes, this. Okay, now where is the zone we are looking at? We're looking at this, right? Where's the candle that broke out? This was the candle that broke out. This is a perfect one. I would have taken this trade. Okay, I would have taken this trade. You get me? I would have taken it because the candle that broke out is too small. Okay, it was actually very small, meaning that I could actually control my risk better. So I would enter at the closure. I would enter at. Oh, this line is not straight. Let's use a straight line. You can see it clearly now. So the candle that broke out was obviously this one. So I would have entered here at the closure of this candle. Okay, then I suppose that have been above it. This is a very perfect example. Now I'll just catch this next candle and leave. Okay, this would have been a perfect example. Anybody could have actually won this. So this is how I want to be trading breakouts. But the good thing is you can decide to hold. Okay, since the market was already trending, you can actually decide to hold this one. You have a higher chance of winning if you hold this one, unlike the range. Okay, so you can decide to hold, meaning you enter the trade, put your stop loss, move the candle, then you can target 1 to 3. Okay, which is most likely to come to you. Why? Because the market is already trending. All right, so this is basically all you need to actually make money from trading breakout. This is all you need. This is all you need to actually make money from trading breakout. Okay, this is basically it. Now, everything I teach here, everything I taught you today, everything I've been teaching in my YouTube channel, this all have all been scripted and inputted in a test in a book which is called the FSB Trading ebook. There are 3 in number, which I call the FSB Trading Trilogy, the FSB Beginner Trader, Intermediate Trader, and the Expert Trader. Okay, this is basically your compass to trading. Okay, everything I said here, everything I teach here, the different strategy I use, they are all embedded in that book. It's your compass to trading. If you don't have that trading ebook, I will advise you to get it now, because it's basically going to answer basically all your trading questions, ranging from what is the best time frame to trade, what is the best kind of trader, meaning talking about scalping, day trading, what's the best one you could do. Okay, everything you need in trading, the beginner to the expert level, is all embedded in the book. So if you're here, have not gotten that book, I think there's a link in the description to reach me directly to get the book, or I think there'll also be a link in the description to get the book directly if you want that. So you should get that. Okay, so this is basically for today's video. I believe you actually understood what I explained. If there's any other question, any other scenario you want to show me, you can send me a message or drop a comment in the comment section and I will get back to you. Okay, so this is how you actually trade breakout, and let me know how it goes for you.